Hi everyone, thank you so much for joining us for today's webinar where we will share with you the results from our survey of construction and property employers and hiring managers across Canada. Your presenter today is Jim Fearon, the Vice President of Central Region at Hayes Canada. Jim has worked for Hayes for almost 18 years, 5 here in Calgary. Thanks, Jim.
Thanks, Caitlin, and good morning, everyone. Thank you for joining us this morning. I'm also joined by Harry Jenkins in Vancouver, Matt Donovan in Calgary, and Bob Bracalenti in Toronto, who all recruit for us in our construction and property business and are here to help answer any questions that we have at the end of the webinar. So we'll have you for approximately half an hour to share the results of the survey and have 10 minutes at the end for questions. Send the questions in as we go along or wait until the end, and we'll cover as many of those as possible. So just a little about the survey before we start. As most of you know, every year we produce an annual salary guide which shows typical salaries paid across a selection of industries and functional areas, cross-referenced for level of experience and type of company they may be found in. The salaries are largely based on what we see every day in the roles we fill and the candidates that we meet. It's become an invaluable reference tool for literally thousands of hiring managers across the country, and we're very proud of its simplicity and user-friendliness. To request a copy of the 2016 guide, go to hayes.ca/salary guide. In addition to the guide, we also survey our clients about hiring plans, salary changes, business activity forecasts, and their confidence in the economy. This year we've included 5 years of data in some instances to show trends in the job market, and we feel that puts us in a position to see things that others can't and allows us to provide valuable advice and recommendations to our clients. Today's webinar is specifically about the construction and property market in Canada, with some slides about the overall trends we're seeing as well. This year the survey was completed by 3,500 hiring managers, HR professionals and business leaders across the country, covering 16 different industries or sectors and 20 functional areas. I'll pull out regional and industry differences and variances as we go along for comparison's sake. Okay, so let's start with the headlines from the overall guide. So corporate Canada's confidence in the economy, in the economic stability is more conservative than in past years. Despite market concerns, business activity forecasts remain consistent with previous years, outside of Alberta that is. Employers are increasing salaries at a slow rate, although they are willing to alter salaries to attract talent. Awareness has become recognised as a new recruitment challenge, and I'll explain that a bit more later on. And succession planning is no longer a nice to have, it's a must have. When we look specifically at the construction and property industry, we have the following topping the bill. So the construction and property employers' economic outlook is slightly less optimistic than the national average. Whilst the property sector's expectations for business growth are similar to industry overall, the construction market is more conservative. The majority of construction and property employers are planning on increasing salaries in 2016. And lastly, mirroring the overall results, construction and property employers are hoping to do more business with the same amount of people as business activity is expected to outpace staffing level growth. Let's start with a look at the overall market outlook. We'll start with feelings about the economy in general and whether people believe it will strengthen, weaken or remain the same. Last year we saw the positives outweigh the neutrals for the first time in years. This year it's flipped back again, and by a margin that's greater than any time in the last 4 years. 50% believe the economy will remain static in 2016, and around the same proportion believe it'll improve as there are that believe it'll weaken. So that's around the mid-20 percentages. Why the change? Well, the headline for the Canadian economy in the last 12 months has obviously been dominated by oil prices, and when we conducted the survey last year, the price of a barrel of oil was still over $80, and we hadn't really seen a change in confidence at all. Now with it bouncing around the $40 mark, it's a different story. And so just how much of an issue is the oil price and the Alberta economy having on the overall story? Well, this slide shows a comparison of the results from BC, Alberta and Ontario, and you can see they're a pretty stark difference. Alberta's at the bottom there, and not surprisingly, what was previously the most confident province is now the least. In 2015, 60% of respondents believed the economy would strengthen in the coming year. That's now around 15%, with a sniff under 50% believing or perhaps hoping that it will remain static. Sadly, nearly 40% believe things will get worse for the Canadian economy in the coming year. In BC, it's a slightly different story, where 35% believe the economy will strengthen and only 15% say it will get worse. And in Ontario, it's a fairly similar story, with 30% saying it will improve and around 15% saying it will get worse. Now, we've asked this question with the economy in general in mind, as opposed to that of your own province, but it's pretty clear that confidence levels are affected by what's happening locally, and that's not really very surprising. So how does this affect the construction and property market industry for the year ahead? Well, you can see a fairly similar sentiment from these respondents. Construction is both slightly more optimistic, with about 30% expecting to see the economy strengthen, and slightly more concerned, with 23% foresee it weakening versus the overall national results. I'd say we're seeing the concern in the Albertan economy impacting sentiment there, with a far more uncertain year ahead for us. In property, employers are largely predicting a flat year, with nearly 65% expecting the economy to stay static across the country. Only 17% are concerned that the economy will weaken, whilst 19% think it will strengthen. How about what's happening with business activity levels? Let me explain this slide first. So the shaded lines are what the expectation was for that year, and the solid colour lines are what actually happened that year. We have a couple more slides like this to follow that are designed in the same way. So there's two highlights from this slide, really. One, despite the fact that confidence in the general economy has dropped, we can see that the majority of employers, at 60%, believe that business activity levels will improve in the coming year. In other words, the economy isn't great, but we'll be fine. Secondly, if you look at 2015, 70% said they expected to see business activity levels increase, but in reality, less than 50% actually saw that come to pass. Now, generally speaking, there are less companies seeing better years than expected, if that makes sense, because people are optimistic. The thing about 2015, though, was the size of the difference. So there was over a 20-point difference, when usually the difference is around 5 points. What does this mean for 2016? Well, we have 60% saying they're expecting improvements, and it'll be interesting to see next year whether the reality is more in line with the 55%, which would be the 5-point drop, or more worrying 40%, which would obviously be a 20-point gap, like we saw in 2015. Again, for this to mean anything, you've got to break it down regionally. I'll start with BC in the top right. So pretty positive overall. 55% saw increases last year, and almost 70% are expecting an increase in 2016. In Ontario, it's very similar. 50% saw an increase last year, and nearly 70% expecting an increase in 2016. Alberta, however, is very, very different. Over 50% saw a decrease last year, and only around 35% are expecting an improvement in 2016, which we know will convert into less than that in reality. Let's take a look at how that compares specifically within the construction and property sector. The good news is that the industry as a whole is more positive about the outlook for 2016. Last year, more than 60% of construction companies saw business activity either decline or remain the same, but we're seeing more than 50% predicting an uplift in activity in 2016. At the ground level, we're seeing that most construction markets are very busy, with only Alberta and Saskatchewan showing any real signs of slowdown. There's still plenty of construction work going on in both those markets, but the pipeline is starting to look a little bit drier. The property market is even more optimistic, with half saying business activity increased in 2015, and even more expecting it to increase again in 2016. Only 5% are expecting a decrease in business activity, which is a great sign. Now, given only 29.6% of construction and 18.6% of property companies see the economy strengthening, it is interesting to see 50 and 56% expecting to do more business, so we'll see how that pans out. We wanted to get at the whole oil and gas question and decided the best way to do it was just to ask. So we asked whether, as a result of the oil and gas downturn, do you plan to slow or delay projects or business activity levels in the upcoming 6 to 12 months? Now, only 20% of respondents said yes, they would, and I would suggest most of these were from Alberta, so the vast majority of employers are saying they're pretty much unaffected. We also asked them what they felt would be the best performing industry sectors in the coming year, and banking and IT were at the top of that list. So let's see how this is translating into recruitment and hiring plans. So looking at permanent recruitment plans first, for the last 3 years, the expectations and reality have been remarkably similar. So generally speaking, people tend to be optimistic at the start of the year, so there's always some sort of gap between what they expect to happen through the year and what actually happens over the course of the 12 months. In 2016, we've got slightly more saying they plan to hold steady than in 2015, with over 50% saying that, and 35% saying they expect to increase permanent headcount, which is still a very healthy number and similar to previous years. Overall, it's very consistent and it's pretty conservative, but bear in mind that we just saw confidence levels dropping, so it'll be interesting this time next year to see if expectations were actually met. How about variances by region on hiring plans? Well, if we look at BC and Ontario first, we have a pretty impressive level of consistency. In BC, around 40% growing and 40% staying the same every year for 3 years. Expectations for 2016 are slightly higher on both grow and stay. On both grow and stay, slightly higher on both grow and stay the same, and lower on reducing permanent headcount. But my guess would be that by the time the year is done, we'll see virtually the same as previous years. A similar pattern in Ontario, slightly more conservative than BC in past years, but the same level of consistency for 3 years in a row. 45% are holding steady, 35% are growing, and the expectations for 2016, well, for the same reasons as I just mentioned, 2016 looks like it will be virtually the same. It's an about turn for Alberta though, and it looks set to continue. So almost 50% of respondents saw a reduction in permanent headcount in 2015, with even more expecting to make further layoffs in 2016, sadly. What happens in Alberta will largely depend on what happens to the price of oil, so I'll have to hope we see movement in a positive direction sooner rather than later. And again, how does the construction and property industry compare with the overall figures? Well, for the first time in 4 years, more construction respondents expect to keep headcount the same rather than increase numbers. Considering more than half still expect business activity to increase, it does look like employers are looking to do more business without adding to their workforce in the coming year. Looking at property, the trend is similar, with about 1/3 expecting to increase headcount in 2016. Let's take a very quick look at temporary hiring, and really this looks like things will remain the same as previous years. The vast majority of companies, more than 60%, say they'll hold the use of temporary or contract workers steady, whilst 20% are planning on increasing their flexible workforce. And what about in the construction and property market? Well, typically we see that the construction and property industry in Canada has one of the lowest usages of temp workers, which is actually contrary to what we see elsewhere in the world. You can see here that there's very little change expected in the volumes of temps or contractors from this year to next, with some markets looking at, I guess, a year of uncertainty ahead. We wonder whether there's an opportunity for them to look at augmenting their permanent staff by bringing on a few contractors rather than committing full headcounts where they don't necessarily have to. Now let's do a quick update on the skills shortage, which most definitely hasn't gone away in the last 12 months. The topic of a skills shortage has gone out of the media in the last 6 to 12 months or so, and this is probably because of the attention on the oil patch, and perhaps because of a general cooling in the economy, as we've already mentioned. However, the problem definitely hasn't gone away. We're pretty sure it's just keeping a lower profile. Our view is that there's a clear shortage of highly skilled people across the majority of Canada's industries, and the construction and property sector is no different. At the same time, there's a challenge to find work if you're unskilled or at an entry level. In any event, we asked whether Canada suffers from a skills shortage, and 72% of construction respondents believe there is. That's compared to an overall response of 61%. We also asked whether your own industry is affected by a skills shortage, and 79% believe that to be the case. This is an interesting and consistent pattern where respondents tell us the skills shortage in their industry or function is worse than the skills shortage overall. We also asked what you think are the main reasons contributing to the skills shortage in the industry, and by far and away the biggest reasons, at 34% and 32% respectively, were a lack of training and professional development and a lack of people entering the industry. Unsurprisingly, the same as last year, but that does mean that the problem isn't going away. Now, the lack of skilled candidates has an effect on organisations, and we wanted to investigate and understand more about this. 43% of construction employers said the skills shortage was affecting their own business activity levels or holding them back from growing. So how is it affecting business activity? Well, 55% said it's affecting production directly. This is interesting because on the one hand, you have employers trying to increase productivity by doing more work with the same number of people, but at the same time saying that productivity is being negatively affected by not being able to hire the right people, and therein lies the problem. There's a clear gap between the skills that are required and the people that are available. What effect is the skills shortage having within companies and on existing staff? Well, around 20% say it's causing increased stress leave. Just under 30% say they're seeing reduced levels of office morale, and in a dominant and increasing number, more than 60%, say this is causing general inefficiencies in their organisation. And the point here is that companies are trying to do more with the same number of staff, and while this is an attractive business case, it comes with a health warning. Your plans to keep up with your growth expectations or current business levels could be impeded by not attracting the right people to your team and possibly losing some of your existing high-value staff along the way, which is definitely not what you want to happen. So what are employers doing to respond to this issue? Well, the most popular remedy is combining roles, internal training, and changing processes and organisational structure, which all make sense. However, sustainable business requires development and promotion of staff, but only around 17% of construction employers use succession planning as a solution to the skills shortage. I'll come back to that topic in a moment. We asked what level of pressure employers felt their people are under due to a shortage of skills in certain areas, and 40% said the staff are under high to extremely high pressure because of not being able to find the right people. Finally, what can you do to do a better job at attracting the very niche and hard to find skill sets? Hold on to them and make sure they don't leave. We asked, how are you making your company attractive to top talent? Offering competitive salaries was number one, followed by promoting company culture, and in third spot is offering competitive benefits packages. The least popular tactic when it comes to attraction is promoting career progression. So we also asked, what were the biggest contributing factors to losing people? And guess what? The number one reason was career progression. Salary levels are a major factor here too, so I don't think you can't be competitive, but there's a clear gap here. In fact, as much as 75% of employers say that they don't have a succession plan. Now, we did a report on this a couple of years ago called the What People Want Guide, and we know for a fact that people genuinely want career progression. It's not necessarily or really to do with compensation, it's largely to do with learning new things, having new challenges, and having variety in their work. Our advice is to figure out how you can challenge your best people and to promote the idea that career progression is available within your organisation. We often get asked, how can you promote a succession plan if it's confidential? And that's a pretty decent point, but you don't necessarily have to promote the detail of your plan. You promote the gaps 5 years out from middle to senior management. You need to show that there's opportunity to progress or to do different roles within the organisation, but you don't necessarily have to promise anyone a specific role. They have to earn the right to get that job, but they need to know the prospects are there. Now, the construction and property industry continues to challenge the labour market, and not surprisingly, there are no real changes here. We've seen the same results pretty much every year since we started producing this guide. In construction, estimators, superintendents and senior project managers continue to top the list of skills in most demand. Experience in high-rise and major projects valued at more than $50 million will put you towards the top of the most wanted list. And we're also seeing an elevated demand for people with a proven track record in delivering major P3 projects, and we're expecting that to increase over the next 12 months as the raft of infrastructure projects that have been announced by the incoming government gather momentum. It's good to see that safety is also becoming a more sought-after skill as stringent OH&S is becoming a higher and higher priority on the list of most companies in the industry. In property, it's a pretty similar story in as much as there's no real change. So building operators and power engineers, as well as property managers with residential or commercial experience, remain most needed. The skill shortages in both these areas have really been compounded by the waves of high-rise construction projects being completed over the last number of years across the country, and we think will probably get worse before it eases, if it ever does. I'd also add that despite the prevailing market conditions in Alberta, we're still experiencing heavy needs in these areas, albeit at lower levels, but the good candidates aren't really any easier to find, and there's still a very definite and pronounced skills gap. Now I'm going to talk a little bit about the skills shortage now, as it's something that can and is having a real and quite negative effect on companies. We've asked this question for the last 3 years. What are the main challenges your recruitment plans face for the coming year? Now, for the first 2 years, the key challenges were a skills shortage, which makes total sense, and increased salary levels. But at the time, we saw other items like company profile and reputation becoming more significant. This year, things have really changed significantly. Now, over 50% of employers still say that skill shortages and salary levels are a challenge, but now we see company reputation and level of company profile coming in as challenges. Or in other words, we're having problems hiring because we don't have a high enough profile or awareness amongst the pool of candidates that we're targeting. Why would this be a problem now, but not so much in the past? And my belief is that employers are becoming more aware of the need to be in people's network and communicating to people, and there's more out there in media in general, so in the news and sports, in social media and networking, on the wide variety of job boards. There's lots of noise, and how do you make yourself heard within those mediums? The fact that companies are even thinking about this means that there's definitely progress being made. They're aware of the problem, now they need to fix it. And it's a topic that I could talk about all day, and we've done a lot of research into it, Hayes. If you do want to talk about how to develop your digital recruitment strategy, drop me an email, and I'll be happy to have a chat with you offline. How about attracting new people or new entries to your industry or organisation? Well, we asked what you felt was the main reason for fewer people entering the industry. I want to pull out a few of the answers that I feel are connected. So about 30% say it's about a lack of awareness, whether at grade, school or university levels, and then you've got 22% saying that the problems, the perception people have of the industry or the stereotype the industry carries. In my mind, this is pretty much the same thing. It's profile, awareness, and communication of the correct message. We asked who was responsible for sorting this out, and 40% said the responsibility lies with the employers themselves, which I think is encouraging. It's a lot better than saying it's somebody else's problem and actually owning the issue. How do you raise the profile of your organisation? Well, that is definitely a challenge. We heard last year that the Manufacturing Association in Ontario got a group of employers together and decided to raise the industry profile through schools, colleges, online messaging, etc., collectively, and to great effect. It was a lot of work, but it was clearly worth it, and we wonder whether more industry associations and bodies need to get together with more employers and start doing the same thing in other industries. Now, increasing awareness is a medium to long-term strategy to solve your recruitment plans, but as we just saw, it's an essential element of it as well. So that means you have to be able to work in advance and build that awareness over time, so that when the time is right, you can start hiring and you find the right people. Now, that's definitely easier said than done, and it's hard to make a decision to invest time and money for 6 months to a year building awareness when resources and money are tight. And that's a fair point, but when you look at the fact that it takes 2 to 6 months to fill a niche job role, then perhaps the time would actually be well invested up front. Add to this that even though the economy didn't move forward last year, we've got 25% saying it's harder to recruit now than compared to a year ago. And we asked, what were your biggest obstacles to improving your hiring processes? And 67% said that it was simply a lack of internal resources. And this rings through from what we hear every day from our clients. Sourcing the key skill set is hard due to a lack of resources in their own organisation. And I'll leave you with this thought. I'll leave this topic with this thought. 50% of employers say that they experience large to extremely large amounts of pressure on their workload when recruiting. Another reason to argument to invest in a long-term recruitment strategy. Again, I'd be happy to talk about this more offline if anyone is interested. So let's have a quick look at how this is affecting salary levels. Now, we ask each year how much salary levels were increased in the previous year, and have shown this from 2012 along with the plans for 2016. The trend here is quite simple. More and more we see a move towards less than 3%, and you can see there 70% of companies are planning on offering that for 2016. Increases of more than 3% are becoming rarer, with around 25% of companies doing that now. Now, if employers are expecting business levels to increase and are not planning on adding many more people, then why is there a trend to more conservative salary increases? We believe that this is the view on the economy in general coming home to roost. So the economy isn't awesome, but our business will be fine. I won't add more people, and I also won't be increasing salary levels. It's a kind of very cautious optimism, or an optimism that doesn't really translate into any significant investment. Looking at this by industry, we have a whole range of industries printed in the guide, but there are just a few here to highlight. In construction, nearly 75% are offering pay rises of less than 3%, or in fact freezing them. Property management and facilities management are the most confident of the bunch, around 30% offering more than a 3% pay rise, and unsurprisingly, resources and mining being the most conservative at 29% on a salary freeze. Let's have a look at how this varies by functional area within a company. So based on this, the functional area that will be treated the most fiscally prudent is procurement, and I suppose that makes sense, practicing what you preach, with 80% saying they'll offer a less than 3% increase within their procurement departments. Office professional and admin are the most extreme, with 43% getting an increase of more than 3% and 29% offering a zero change, and 25% of IT and HR departments are offering over 3% raises. Now, when you talk about planned salary increases and bring it down to one set percentage, i.e. saying salaries will go up 3%, for example, I think it misses the point in a way. It may make sense that in some instances in an organisation there's a significant salary increase, and in others there's none. Now, that can be a controversial thing to say, but I think it makes sense. What I mean is, are there areas where you need to increase salaries and others that you don't? For example, niche skill sets or certain seniority levels. We asked about the willingness to alter salary levels to attract top talent. 19% already have, 5% plan to, and more than 40% so they'd consider it. We also asked where you're feeling the most wage pressure, and it's at the mid to senior management level, with more than 60% saying they feel some to excessive pressure. Anyway, if this is the case, then it makes sense to treat niche skill sets, top talent, and certain management roles separately when it comes to figuring out what to do with salary levels. And the final point on this topic, and I'm not sure you want to hear this, but 62% of employees said that they expect to receive a salary increase in 2016, despite the fact that 53% of employees said they've received one in the last 6 to 12 months. And then finally, we'll just very, very briefly touch on benefits. So in the full salary guide, you can look at the most popular benefits being added by industry in some detail. I've picked out just a few here to illustrate it. You can see performance-related bonuses are number one in the construction industry. Flexible work hours are most popular on property and facilities management and manufacturing. And the ability to work from home is the most popular in resources and mining. Now, I can only assume that means head office jobs as opposed to operational mining jobs. Otherwise, those would be some fairly strange mining operations. Okay, so that's everything we wanted to communicate today. I wanted to leave you with a few key findings and recommendations, and then finish off with a few questions if we have any. So confidence in the economy is tempered. Employers in regions outside of Alberta are optimistic for future business activity. This is converting into steady year-on-year hiring plans. Pressure on existing staff is getting worse. Skills shortages in specific areas are still clearly present. Salary increases of less than 3% persists, however employers are willing to alter compensation to get the best talent, and recruitment is evolving, presenting new challenges that people don't necessarily have the answers to. And just to touch on our recommendations, so attract and retain staff by developing and promoting a succession plan. It's free to do this, so why not get on with it? This has been a theme that we've seen for a number of years now, and it really isn't changing. Build a talent pipeline today, even if you're not recruiting. It's taking a long time to find niche skills when you start to look, so why not do the work up front? Develop and broadcast your employer value proposition. You need to let people know why it's attractive to come and work for your company, and invest in the future by bringing in more junior staff to support existing workforce. Protect your people assets through better engagement by communicating timelines for salary increases. This is just to keep expectations realistic and minimise any unwelcome surprises people might have. Okay, that's the end of the key messages we wanted to share today. Thank you very much for dialing in and listening. I hope you found it useful and that you got at least one or two constructive ideas from it. We've now got a couple of minutes spare to answer any questions that you have. If you've got a question, as Caitlin said at the beginning, please type it into the chat box and we'll do our best to answer it. As I said, I've got Harry Jenkins, Matt Donovan and Bob Bracalenti online who recruit for us in our construction and property business from the West Coast to the East Coast, respectively. So and they're here to help me with any answers. As we're waiting for the questions to come through, to request a copy of the full report, please go to hayes.ca/salary guide. We'll also have a recording of the webinar available online on our YouTube channel later on today. So let's see whether we've got any questions coming through. So we do have one question come through. Should property managers move to find the best jobs? And I'll pass that question over to Matt Donovan, who recruits in property in our Calgary office.
Well, I think we see often in the industry that can be quite a jumpy part of the market. Property managers do tend to move often. I'd say that it is good to look within your own organization for opportunities to move and grow, first of all. It can be difficult within third-party property management as opposed to working on the owner side, as things are less predictable as portfolios are chopped and changed. But yes, it's never a bad idea to look at what else is out there, and particularly from my experience with candidates, most property managers are always open to hearing about new opportunities for growth. And typically they will find a better opportunity with higher salaries elsewhere.
I'd also add to that, we produced a document called The DNA of a Commercial Real Estate Leader recently, and what we saw was that the career path to becoming a VP actually did involve a lot of moving from one job to the next to actually create the openings and to gain the level of the breadth of experience you needed to succeed in moving to the top.
I'd also add to that as well, property organizations tend to be quite narrow at the top, so you'd see a lot of people reach a senior level and then take a step down in seniority in a larger company to take 2 steps forward later on in their career. There's a majority of the VPs that we did survey that had done that at one point or another and suggested that as a really good way to progress your career further.
Just to jump in for a sec, I think it's similar in construction, and to dovetail with what Jim mentioned earlier, the fact that people feel they have to move from company to company to advance just stresses the need for succession planning more, because if you have bright people that think their only way to progress is to move to a competitor, that's not an ideal situation. You want to have career pathing internally to allow them to grow, whether it be in property or construction.
Thank you, Bob.
Yeah.
So we've got another question here. Why do you think employers are becoming more concerned with having an employer brand and promoting their culture? Does it really matter to candidates? And I think the answer to that, well, the answer to the last part is that it absolutely does matter to candidates, and I think more and more we're seeing that employees across regions want to feel proud of the company that work for. They like to have, want to work for a company that have a positive image. The reason it's becoming important to do so is because of the way that potential employees are looking for work these days. Job searches are more and more done in the digital space. They're online, they're done through social media, and a negative image within the industry can be spread around that market very easily. People communicate a lot, they make recommendations. A lot of people will go and work for companies based on what they know of them from people that have worked there in the past. So having a positive employer brand, promoting your culture in a positive way, an effective way, and consistently is very, very important. And the millennials, particularly to the millennials coming through, I think is an even bigger deal.
Just to add to that, Jim, I think there's a practical aspect as well. In functional positions, if you work for a company that has a strong brand, it's easier to communicate with your suppliers, your trades, you're better received. And just from a practical standpoint, it makes a person's work experience easier having a strong company brand rather than someone that you struggle with.
That's a very good point. Thank you, Bob. Got another question here. I'm having difficulties finding positions due to what I think is my age, 63. Should I give up? Well, that's a very difficult question to answer, I'd say. My actual answer would be no, I wouldn't give up. I think that there are jobs available for people of all ages in the market, but it really depends on finding the right opportunity, and that sounds like an obvious thing to say, but I think it's working out how you can best provide your services to an organisation. I'd say there's a gross generalisation when a company is looking to hire a long-term employee into a pivotal middle management role or senior management role. They're looking at longevity, and your age definitely stands against you from that perspective. But at the same time, we know for a fact that there's a real lack of people coming through at a middle management level in most industries. There's a real skills gap at that level. If it was me, I'd probably be marketing myself as somebody that can come in and help develop succession plans, that can help mentor and train more junior employees coming through, and help leave the organisation in a much stronger point down the track with some people that you've passed your knowledge on to. So I wouldn't give up. I'd say you need to think about how you're trying to market yourself, the types of jobs you're going after, and the benefit you can offer the organisations you're trying to get work with. I'd also say you should probably try and make your applications direct and, if at all, over the phone rather than sending CVs in via email to advertisements. I'd try and pick up the phone and make connections that way. And then we've got another question coming in. I hope that answers your question. We've got another question coming in. How is the oil and gas downturn affecting the construction market within and outside Alberta? Well, I'll comment on the inside Alberta first because I'm here, and then pass it over to Bob and Harry to give their opinions on what's going on in BC and Ontario. So the market in Alberta is still relatively strong. There's a lot of construction going on. There's still plenty of cranes around downtown and in the outer communities. So we haven't seen a raft of projects getting cancelled. The areas that have been hit most aggressively is residential construction, which has gone really quite flat. There's been far fewer new starts on the housing front in a couple of years, and that's where we've seen the activity really drop away. Where companies have started to get more cautious is probably 12 months ago, they would hire a project manager or a superintendent with the right kind of experience in the expectance that they would pick up a project over a relatively short period of time that they'd be able to put that person into. Now they really are only looking at projects that they have on the go at the moment because the pipeline of work is starting to dry up. There's less money actually getting put into new investments. There's less projects being proposed, and so we're actually starting to see the volume of new projects coming through dropping off. So the issue could probably come around 6 to 12 to 18 months down the track as projects that are currently ongoing start finishing up and there's less work for people to move on to. So it may be more of an issue for late 2016 and early 2017. I'd pass over to Bob and Harry to comment on whether they're seeing any impact at all on their local construction markets.
Well, I think Jim, or from a BC standpoint, definitely that you're seeing a lot of sort of labour come back home. You know, I think there's a lot of confidence in the BC market, especially with the amount of major infrastructure that's looking to start and already had started, especially in northern BC. But even here in the lower mainland, you're seeing a lot of people just come back, and it sort of hasn't flooded the market yet with labour. I think there's just a lot more sort of competition for the roles that are out there. So I think that'll end up keeping sort of salaries quite steady as well, because there'll be, you know, multiple people competing for the same position now, where there wasn't, you know, a year ago or so.
So it started to ease the skill shortage a bit.
A little bit, yeah.
And Bob?
Well, I mean, if you watch the news, you would have a lot more fearful outlook than if you just pay attention to what's actually going on. Here in Toronto, things have been very steady. We have a lot of big projects starting up. There's a lot on the go. We have, like Harry said, had some people, a lot of in the labor and trades type, come back, but not as much as you would think. I think a lot of people have permanently relocated out west. And, you know, we've been steady. There hasn't been a real impact outside of forecasting on the day-to-day here.
Okay.
And sorry, I was just going to say, and residential is staying strong. I should have mentioned that you know, our residential side is doing very well.
Okay, it's good to hear. I think we've got time for one last question. I'm going to have a crack at it. What strategy should be used for startup companies that have an international brand but not a local brand to attract the best talent? And that is a very, very good question, and one that I could probably take a fair while to answer. I wouldn't mind finding out who's asked that question, because it'd be worth having a chat about. But I'd say a couple of things. Now, one is that joining a startup company, particularly if it's an international organisation that are financially secure and well-backed, is a very attractive thing for people, because it offers them almost immediate career progression. If you're one of the first people in to a startup organisation, then your career path is far more open than if you're going into a well-established organisation that already employs, say, 500 or 2,000 people. So my first point is, it is a very attractive thing. The tough thing is, how do you tell people about it? And I'd say the answer to that is you need a very, very constructive, well put together digital marketing strategy. Social media is used extensively in North America and in Canada in particular for recruitment. And I think if you're trying to attract people to your brand, you've got to be sticking your brand in front of them. Now, the challenge you'll have as a startup organisation, I would think, is that your network is not brilliant in Canada. And as a result of that, how can you actually communicate with all these people? And in all honesty, I think we have a product at Hays that can help you with that. And we should have a chat about it offline. We have a very, very strong network in North America that could help you. So I'll leave it at that. I hope that answered your question a little bit, and maybe we can talk offline later on. I think that's pretty much taken us over time. Thank you very much, everyone, for tuning in. Thank you very much for the questions. Hopefully, we answered them reasonably well. As I said before, you can get a copy of the guide off our website. The URL is on the screen there. This webinar will be hosted on our YouTube channel this afternoon. And if you have any questions you'd like to ask me directly, please email me at jim.fearon@hays.com, and I'd be happy to talk to you. Thank you very much, everyone, and have a lovely weekend.